Okay, S&P 500 all-time highs. That's what we're talking about today. So once again, I'm here to talk to you about these remarkable gains we're seeing in the equity markets. The S&P has hit an all-time high, and the NASDAQ is still firing upwards like a SpaceX rocket. In short, I simply don't believe these valuations are sustainable. And I'm putting my own money where my mouth is. I've been a seller, and I've been selling pretty aggressively over the last couple of days and weeks. And here's why. Check out this table. The S&P 500 gains are being driven by 5 stocks: Apple, Alphabet, Amazon, Facebook, and Microsoft. And they've had a great year. Collectively, this group represents 23% of the index. The other 495 companies represent the balance. Big tech is driving this index, it's driving up the market, and it doesn't represent the whole market. Prices are basically going one direction and earnings are going another direction. Check out this graph. Obviously, a company's value in the stock market is influenced by its earnings. However, these days we're seeing stock prices go one way and earnings go the other way. So you've heard about V-shaped recovery, U-shaped recovery. This is what I would call a greater than recovery. Basically, the valuations are far greater than the earnings. Look, coronavirus is still a threat. I hate to keep bringing this up and reminding people, but this virus is just sticking around and it is continuing to grow globally. Once flu season comes back in the Northern Hemisphere, we're going to see a reacceleration and continued global shutdowns. Never mind the ongoing theme that I keep talking about with respect to supply chain problems. And as far as government aid is concerned, that's going to eventually come to an end as well. My last point is that government aid is going to stop. Now, governments can only kick the can down the road so far. At some point, these billions and billions of dollars worth of spending that's going on wage subsidies and direct handouts by both the Canadian government here, which doesn't really have a huge of effect on the global markets, but definitely in the US economy, and the quantitative easing by the central banks has got to slow down. And when this finally happens, the damage that's already been done will start to finally feel the effects of that damage, both in the pocketbooks of corporations and individuals. If you'd like to talk a bit more about your portfolio and how you're positioned today to manage what we see as being some very dark clouds on the horizon in the coming fall, feel free to talk to Stefan and James and let's take a look at your portfolio and see if we can help you out. Give us a call and we'll look forward to chatting with you again soon.